Hi there, my name is Randy Howe, and today's topic is on accrual accounting, which is the opposite of cash accounting. The idea of cash accounting initially makes sense to folks who are new at this, but in medium and larger companies, accrual accounting is the preferred accounting system. It may not be as intuitive at first, but hopefully we can make it more understandable. So if you're ready, let's begin. First, let's do a quick contrast between cash accounting and accrual accounting. In cash accounting, transactions are entered when they impact cash, either positively or negatively. Revenue is recorded when you receive cash. Expenses are recorded when you pay for stuff, whether it is inventory, supplies, or your employees' wages. In accrual accounting, the timing can be different. Revenue is recorded when you have earned the revenue, not when you have received the cash. Many times, those are at the same time. However, sometimes they are not. Suppose you sold a product to a customer and gave him 30 days, same as cash payment terms. In accrual accounting, you would record the sale right away, even though you won't receive the cash for 30 days. Expenses are recorded when you have incurred them. This might be different than when you actually pay for them. For instance, suppose you get weekly supplies from your regular vendor, and he lets you pay at the beginning of the next month. Under the cash accounting, you would not record anything until that next month when you made the payment. Under accrual accounting, you would record an entry each week, even though you have not yet paid for anything. Also, it is not just a timing difference. The general ledger accounts that can get charged can also be very different. For example, suppose you own a convenience store. Your supplier just brought in 20 cases of products for your shelves, and you paid the delivery guy before he left. In a cash accounting system, you would probably record that as an expense, which flows into the income statement. In an accrual accounting system, you might record that as inventory, which shows up on the balance sheet. If so, then you may not record the inventory as an expense until the customer actually buys those products. Now let's take a look at some specific transactions to help make things more clear. Here's the scenario. You sell a computer to a customer for $2,000 and allow him to pay you in 30 days. He leaves your store with the computer. What transaction would get recorded? Let's ignore the cost of goods sold for the moment and just focus on the sell side of this transaction. Under the cash system, we would not post anything until the customer pays us in 30 days. And then it would look something like this. Cash increasing $2,000, sales increasing $2,000. Under the accrual accounting system, on the day the customer left with the computer, we would post $2,000 to sales and $2,000 to accounts receivable. In 30 days, when the customer pays his bill, we would then post $2,000 to cash and reduce the accounts receivable by $2,000. So, you might be wondering, what happens if the customer doesn't pay his bill in 30 days? Well, we would be sad for sure. But then we would think about collection efforts, and we might have to write the account off as a bad debt. But that is a discussion for another day. At the time of the sale, we assume we will get paid, and we record it with that assumption. So why do accountants tend to prefer the use of the accrual method? The main reason is that we try to match the transactions in your books with the events in real life that created them. You may hear accountants use the term matching principle when describing this practice. We say we earn the revenue when the customer left with the product. Because we have earned the revenue, we record the revenue, even though we did not receive the cash. Now, we will not record anything in the cash account until we actually receive the cash. That is where the accounts receivable account comes in handy. We always keep the cash account clean. Here is another example of accrual accounting. Suppose you buy an insurance policy for $12,000 and that policy covers a 1-year period. You may pay for the policy on day 1 of the policy period. Do you just record the policy as an expense in full on the day that you paid for it? Under the cash accounting method, you would, but under the accrual method, you would not. For a 1-year policy, you would show an expense each month for 12 months. The monthly expense would be 1/12 of the policy cost. Here's how that transaction would look. So on the day that you bought the policy, you would be reducing cash by $12,000. You would be increasing the asset known as prepaid insurance by $12,000. At the end of each month, the accountant would record this transaction. You would reduce the prepaid insurance account by the $1,000, and you would record insurance expense by $1,000. This would be done each month. At the end of the 12 months, the balance in the prepaid insurance account would be 0. So to backtrack, suppose you expensed your entire policy in that month that you paid for it. When you look at your monthly income statement, your performance may look terrible in that 1 month. Then it would look too good, unrealistically good, in the following 11 months. Accrual accounting tries to match the expenses with all the relevant time periods, which in this case is the full 12 months of the policy. This is how the income statement would look using the accrual method. Notice that the first month is not as bad as in the previous example. When you use the accrual method, you will see prepaid GL accounts on your balance sheet. This is to acknowledge that you paid for something but have not yet gotten the full use of it yet. These accounts are considered assets. You own something that will be useful in the future, just as if you owned inventory, equipment, or other assets. Of course, how you use each of these assets does vary dramatically. Here's another example of accrual accounting. Suppose you sold a warranty to your customer that will last 12 months, and you sold it for $6,000. Under the cash method, you might record revenue of $6,000 and cash increasing by $6,000. But you have not fully earned this revenue. You will earn this over the 12-month period of the warranty. So on day 1, according to the accrual accounting method, the entry would look like this. You will increase cash by $6,000, but then you will also increase this liability account called unearned warranty revenue. This account is a liability, just as if you owed money to the bank. Think of it this way. If the customer turned around and canceled the warranty, you might owe that customer a refund. Since you have not yet earned the money, you do not yet consider it revenue. Now, of course, your company might put restrictions on when the customer can cancel the policy, but I think you get the idea. At the end of each month, the accountant would record an entry like this. Revenue is increased by $500, and the unearned warranty revenue account is decreased by $500. If all goes well, at the end of the 12-month warranty period, you will have recorded the full $6,000 of revenue and have no liability balance remaining. Let's look at one more example. This one will involve payroll taxes. Now it has a few more parts to it, so please bear with me. Suppose you have 2 employees that each make $52,000 per year, which comes out to $1,000 per week. We are going to assume that the payroll tax that the employer is responsible for is $153 per week, and the payroll tax that will come out of the employee's checks is $353. The entry to record the payroll on payday would look like this. The payroll expense of $2,153 is the total of the $2,000 in wages plus the employer portion of the payroll tax, which we have just said is $153. The amount posted to the payroll taxes payable, a liability account, is $506. This is the amount from the employers, which is $153, plus the amount which comes out of the employee's checks, which is $353. What actually comes out of the cash account for the company for this week is $1,647. This went to the employees. The next week, the company pays the payroll taxes to the government. This is $506. This 506 represents the employer portion of $153 plus the employee portion of $353. This entry might be a week or so after the original payroll. It might even be later. It really depends on the local and federal government rules that are in place at the time. You can see from this example how the payable account is being used to help record the transactions. We do not wait until the cash is actually paid to record the payroll expense. So this is how accrual accounting works in a nutshell. So why do we do it? In accounting circles, it just makes more sense. Can't we just leave it at that? No, seriously. It does seem to be a more accurate reflection of how the company is doing, how much revenue has been earned, and how much expense has really been incurred. In contrast, if the cash method were used, there would be big differences, time differences, between when the entry was done and when the obligations have been settled. This could lead to big swings in the numbers from month to month. This would also make it difficult to analyze the company performance and may be challenging to explain the results to the various readers of the reports. Take a look at the summary monthly income statements here. This shows what happens if you expense that insurance policy that we talked about in just the 1 month. Notice that it appears you had a net loss for the month. Now, if you spread that policy over the length of the policy life, it shows that the first month is not that bad after all. With the accrual accounting method, your analysis and your various conversations can be better focused on your level of sales, the amount of markup on your products and services, and other important topics about your business. Well, I hope this has been helpful. We will cover more in future episodes, so please stay tuned. This has been Managing Your Business by the Numbers. My name is Randy Helm. Thank you for watching this video. Be sure to look for new videos from me soon. If you liked what you saw, be sure to subscribe to this channel and hit the notification bell so that you do not miss out on any new material. Also, please leave a comment down below if there is a topic you would like me to cover. Until next time, have a good day.